Good morning, everybody. It is Monday, the 13th of April. This is the Morning Blast with myself, Ryan, and of course, Michael. We like to think of ourselves as the most candid and honest and trustworthy and funniest and just bestest market-related morning podcast there is in the world, in the universe, etc., etc. No, nothing we say on this podcast is investment advice. It's labeled as explicit on podcast players because we have very, very foul language and we do not apologize for that. If we see a cunt, we'll call them a cunt. Yes. What else can I say? Michael, good morning. Happy Monday. The sun is shining.
Indeed, yes. Very good morning to you, Ryan. Good morning, everyone. The sun is shining, although I must admit it's a lot colder outside than it may look. I got a bit of a shock when I was waiting for the train this morning.
I'm glad it's not just me because I looked outside and I thought, bloody hell, it's bloody lovely outside. I walked out in my shorts and t-shirt for my morning walk around the garden and came swiftly back in. I was like, fuck that. It's a bit too chilly for me.
I can't say I blame you. And to make matters even worse, it may rain later on this afternoon. So summer is definitively over here in the UK.
And obviously, you won't discuss anything else that happened over the weekend. Let's just stick to the golf, not the football.
Well, no, I don't even want to do that, to be honest, because I sat here in the office on Thursday morning and went, fuck it. There's no way that Rory does this back to back.
Well, did you have any money on it?
I did on Scotty Scheffler.
Mug.
And I also managed to back what can only be described as a Shetland pony in the Grand National.
Brilliant. Well, so come back for Michael's betting tips later on in the show.
And then do the complete fucking opposite.
Yeah, exactly. Lay the field. Right, let's get cracking because it is Monday, so we've got quite a lot to go through. Obviously, as it's Monday, we go through what's happened over the whole weekend, what's to come today, and also just a brief look ahead to the week ahead, if that made any sense.
No.
No, it didn't. It's Monday, give me a break. But obviously, what we know what the main subject is going to be. Morning to everyone in the live chat, Cam, etc. Just it's crack on.
I think you were going to say Cam accepted for a second.
No, not quite. Right, let's crack on to begin with an update from our dear friend Clive Lambert over at Futures Techs for the market moves and levels to watch for those technically minded. As he says, gaps galore this morning, but, is that usual for Monday? Yes, it is at the moment, but we'll go on to why specifically there's gaps galore today in a bit. S&P rallied on Friday to 68.88. Nice number there. The low was 68.46, and this gap resistance today as we've opened lower, although we're still above Marabou's support at 67.50. To be honest, I'm not, not full disclaimers and all this, and don't follow me in, but I did have a little nibble on the a little buy of the dip this morning because I think, as Michael will agree, it could have been a lot worse. But Michael has done a very good note on this morning already, which I will retweet shortly, and Michael will go into this in a bit more detail about why we think that. Nasdaq futures also gapped down 25,193 was Friday's low. Obviously, that's now gap resistance. The gaps in DAX is up at 23,892. In the Euro Stoxx 50, it's 58.36 and protects 58.65 and 59.09 on the upside. Bunds also lower. Bund futures saw red on Friday. The low was 125.02 and this is now gap resistance. Euro dollar was briefly back below its 200-day simple moving average overnight, but has now recovered some already. Ditto for cable. Gold, the yellow metal, gapped down but has recovered nicely since, nudging back into Friday's range as Clive went to print. Silver, done the same. 74.88 was Friday's low, and we're back here now after seeing weakness back to 72.54.5 as Asian trade kicked in. In London copper markets, saw green on Friday and a weaker open has found buyers. All the metals look like they want to go higher, and aluminium, aluminium that is leading the way, making fresh 4-year highs this morning. In energy space, no surprise, crude saw red on Friday, but it's opened with a strong bid this morning. Another gap here, down at the gap support now is 98.26, which is also short-term Fibonacci reference. WTI's gap support is $100 bucks and 42 cents. Gap resistance is 109.20. Sorry, gap resistance, 109.20. Gas oil, again, this is pretty much diesel markets, also sitting between two gaps, 12.34 and 12.92 and a half. 50 cents for those of you wondering what a half means in that market. TTF, which is European nat gas, is now trading through the night. Obviously, we had that first, what was it, 10:30 or whatever open it is, Michael?
10.50, I believe it is.
10.50, just to get those headlines out in front of Globex, as we spoke about last week. So, yeah.
Well, on that, I don't think it worked because I didn't see a single.
Well, this is what we said on Friday, right? No fuckers trading it. It's not a retail market. Anyway, so TTF trading through the night. The overnight range, as Clyde went to print, was 46.74.5 to 51.30. Weakness being seen since the proper open at 7 a.m. UK time. That will always be the proper open, just like oil markets properly close at 7:30 UK time. EU carbon markets open on the back foot for only small Fridays, 72.45 low weighing for now. Ags contracts, specifically for Tom more than anyone else. It seems to be the only one interested in these on this morning show. Ags contracts started with a bid, but sellers have responded. Soybeans failing at the Marabou's resistance at 1184. So thank you very much, Clive Lambert. Way.
Right. I have absolutely no idea what that was, but we'll move swiftly on.
I've not had an alcoholic beverage in a week. I'm not sure if it's doing me a lot of good or a lot of bad, because I seem to have far more. You know how normally I've got far too much energy at the best of times?
Yes.
Oh my God, now it's like I am bouncing off the fucking walls.
God, right. Well, you go and bounce off a wall while I tell people what happened over the weekend, and then we can get our teeth into that a little bit more. Because, as you rightly said, when I woke up, well, it was in the middle of the night, about 1 o'clock in the morning, and saw the S&P future down. I think at that point it was about 0.9%, and saw crude up about 7%. My initial reaction was, well, that could have been a lot worse. And I think that really is how I will continue to frame the price action that we see this morning, with actually equity dip buyers starting to step in on both sides of the Atlantic. Of course, there are two major developments that market participants are reacting to this morning, both in the geopolitical sphere. The first being the US-Iran peace talks that took place in Pakistan over the weekend. Those talks, of course, failing to reach a deal despite negotiations having continued for about 21 hours. So very much a marathon negotiating stint going on there. US Vice President J.D. Vance saying that Iran did not accept the US's terms, but that a number of substantive discussions were held. The Iranians basically mirroring that, saying that talks were intensive, but the gaps remain over 2 or 3 key points. The one thing I would say, just in terms of these negotiations, is that Pakistan have said that the country will continue to facilitate talks in the days to come. There hasn't yet been any official comment from either side as to whether further talks will take place, but there have been a handful of sources stories, including in the Wall Street Journal overnight, indicating that another round of discussions could take place within a few days. So I think that is just worth bearing in mind. Anyone, and I'm not just saying this with hindsight, by the way, I did say this on Friday, anyone who was kind of expecting this to reach a deal in one weekend was probably being a little bit ambitious. I think the key thing here is that, fine, a deal wasn't reached, but there aren't any indications that they've completely given up on having a further discussion.
Well, I think that's exactly it. And I think, to dive in a little bit deeper into what the chain of events yesterday, as we said, no one really had a clue on Friday as we kind of recorded. To be honest, we didn't even know if the peace talks, you've got to call it peace talks, I guess, if they were going ahead anyway. This time on Friday, we had no idea if they were going to go ahead. One, they went ahead. One, they spent 21 hours, timestamped 21 hours. I'm sure they took a lunch break. It's me. Yeah, I've been in the office for 4 days. Yeah, but I've gone home every night. You know what I mean?
Not that I've ever said that before.
Well, I might have. So one, we had peace talks, right? One, that they went on for 24 hours. Another bonus is that they are talking. And they continue to talk, and Pakistan have stepped up on that front. Although I've seen they've taken the signs down for this peace talk, so God knows what's happening to them.
Well, do you know what I would love to know? This is a bit of a tangent, right? But I think, how the long Brussels caterers thing is the trade that never fails?
Always.
I reckon long printing companies in countries hosting emergency summits is just as good of a trade, because how the hell do they whip up all these logos and signs and posters in the blink of an eye?
That will be one of those businesses that, some guy with his £100 million yacht in Monaco, you bump into him and say, oh, what do you do? Well, It's a bit neat. Well, basically, I supply all the artwork for all peace talks and summits that go on around the world. All right. Oh,
As you do.
someone's got to do it, I suppose. But anyway, back to what we're talking about. So Vance came away from this and said, look, there's three sticking points. Iran wanted repatriations or whatever it was, or unlocking all their seized money. They want oil embargo. They want, but also they don't agree on. They don't agree on opening the strait as quickly as the US wanted. Also, they don't agree on getting rid of all their uranium. Trump then came out and said, basically, the only sticking point is nuclear. And in True Social, we're going to blockade the Strait of Hormuz, which on its face value read as if any ships that trying to enter or leave. Well, actually, Trump actually said.
Well, yeah, I was going to say, can we just pause there for a second? Because the other thing I would just say about those negotiations that took place over the weekend is that, and again, in just a sign of seriousness, both sides had 70 or 80 odd people there. I mean, the Iranians even brought the governor of their central bank, for goodness sake. So that's quite some lengths to go to if it's all just fake and performative and you're doing it for effect.
Or I will add, anyone that's of any power in Iran are probably itching for an excuse to leave the country.
Well, yeah, that is very true. But yeah, as for that blockade, you're absolutely right. And this is one of the points I made in that note this morning. It seems like it's already been watered down because
it has done.
When Trump posted this out yesterday, his exact words were any and all ships entering and leaving the Strait of Hormuz. But then CENTCOM, which is the US Central Command, overnight have said the blockade will start at 10 o'clock this morning Eastern time for ships heading to and from Iranian ports. Now, that is a very, very different message to the one that Trump put out.
It's a completely different message. It's a critical distinction, right?
And it should actually, sorry, just to add to that, I know we're talking over a lot here this morning, President Trump himself has actually said the same thing on Truth this morning around it's a blockade for ships in and out of Iranian ports.
I think it's a classic Trump tweeting stuff without actually kind of knowing kind of the ramifications behind what he's tweeting, or deciding to get, I hate to say it, but he's the president of the United States, right? President of the free world, et cetera, et cetera. He doesn't exactly need to try and trigger engagement, but he does post stuff worded in a way to get engagement. I mean, you're already the president, mate. You're getting enough engagement. But yeah, and like you said, CENTCOM have said it would be enforced impartially against vessels of all nations, right? The interesting thing here is obviously the China angle. Now, China is overwhelmingly the dominant buyer of Iranian crude. And cutting off Iranian port access is in practice cutting off China's supply of heavily discounted crude. Now, we already know China have been behind the scenes trying to push Iran for a deal. They are not going to like this, right? They're not going to like this at all. Just to give you an idea, before the war, Chinese independent refiners in Shandong relied on Iranian crude and they were getting this about an $8 to $10 per barrel discount to Brent. That supply is now basically shut. Obviously, there's still ships transiting, sailing over that way. There's a few going that way, so it'll be a while before they're completely out. Trump has also threatened a 50% tariff on any country assisting Iran. And if we catch them doing them, he said if we catch them doing that, they get 50%.
That's the second time he's threatened that.
Yeah. Also, just give you a guide of the balancing of the oil market, taking away Iranian exports, according to my good friend Rory Johnson, Iran was exporting roughly 1.5 million barrels per day, even during the war, mostly to China. So that's 1.5 to 2 million barrels that have got to be found elsewhere. Now, I'm sure we've all seen already this morning or overnight over the weekend, this kind of the maps doing the rounds with all of these empty tankers, not just crude, but, gas, also energy product, so it's not just oil that they ship, it's like energy products as well, like so stuff that's been refined already. All of them sailing to the US, all of them sailing to the Gulf to pick up as much as they can. Now, this is, Trump even requoted Rory Johnston's tweet on this saying, this is good news. So it just shows you that, maybe Trump has less appetite to reopen the strait as quickly as possible, whilst he's seeing all of these ships heading to the US to pick up their oil. So again, it's just one to watch. I think we got to take some upside from this, as you said. It's not as bad as it could have been. It could have been, Trump walking away, Vance walking away, and Trump going, these fuckers didn't even want to talk. Let's go back to striking them. He hasn't done that.
Exactly. That's a very good point. And actually, again, this is another thing I put in that note this morning, which, it's on Twitter somewhere if you want to have a read of it. The ceasefire is still in place.
Yeah,
There has been no, and again, this is, 8:45 Monday morning, UK time. The situation may change. But as of right now, there has been no re-escalation in terms of, military activity between the two sides. And actually, I would argue there doesn't particularly look like there's any signs there will be any re-escalation at this moment in time between the two sides, which is another reason why I think market participants are kind of not necessarily taking this in their stride, but it's more a case of, we're pricing out some of the excitement we had last week around a peace deal, as opposed to having to discount all of that, left tail risk, civilization being wiped out, etc., that was being, literally this time last week was kind of the rumor that was doing the round. So I think, it is a significant move, don't get me wrong, but I think the market is kind of viewing this as essentially a negotiating gambit more than anything else.
Yeah.
The idea being we're going to choke off the revenue that Iran are getting from their crude exports. We will hope that that brings the Iranians back to the negotiating table, because no one has indicated at this point that they are, completely walking away from those negotiations. So, yeah, it's an unusual one, I think, to say the least. It's certainly not something I was expecting. I don't think anyone was really expecting it to happen. But having said that, it's actually somewhat understandable why markets perhaps haven't reacted more adversely than we might have expected, than we see this morning.
Exactly. I think all eyes are on now. Well, for me personally, two things I'm watching. One, any sign of a re-escalation of kinetic action.
Mm-hmm.
Two, if Iran, not Iran, it's a country buying, like, say, a Chinese flagged ship or whatever, or whoever, if any ship has docked in or is currently receiving a load of crude or product or whatever from Iran, from an Iranian port, if they try and sail through the strait, what does the US do? I mean, saying blockade is great, it's a great headline, but if a ship is coming at you, these are pretty big ships. I'm no marine biologist, but you ain't going to just put your arms out and slow it down.
No.
So, how do they stop this? How do they stop a ship if it tries? Does this lead to a re-escalation, or if a ship goes for it, does a Leroy Jenkins and heads straight for this US blockade, and then they go, okay, yeah, you've called our bluff. What happens then? So these are the 2 points I'm looking at next. Is there going to be a re-escalation on the kinetic action front? Does anyone that's picked up crude or product from Iran try their luck, and how does Trump react to that, or the US Navy react to that? That's where I am now. I don't know what you think.
No, I think you're pretty much bang on. I think it comes back to those questions we were asking last week. What is the direction of travel? Is it towards a deal? Is it away from a deal? And I mean, a peace deal or a ceasefire on that front. And secondly, in terms of crude, is it towards normalization of flows through Hormuz or away from it? I think they're still the two kind of guiding questions that market participants should be trying to answer. And any incoming news we get, see how it affects your answer to those questions, and that's how you then generate a market view and a bias on the back of that.
Yeah, no, exactly that.
There were just a couple of other things I wanted to mention from Friday very briefly, just before we move on to the week ahead, just in terms of economic data, because, of course, we did have the March US CPI report, frankly, not really telling us anything we didn't know already in terms of inflation stateside. Headline CPI rose by 0.9% on the month last month, which was the biggest month-on-month jump since June of 2022. And that, in turn, dragged the headline pace of inflation to 3.3% on a year-on-year basis, which is the fastest rate in almost 2 years. Pretty much all of that came as a result of higher energy prices. We had a record monthly increase in gasoline prices, and energy prices overall were up by 11% on the month and by around 13% on the year. So very much no surprise there. Importantly for the Fed, though, core inflation was actually a little bit softer than expected at 0.2% on the month and at 2.6% on the year. So yes, everyone's going to, jump on the headline figure and get all excited about it, but realistically that does not impact the policy outlook whatsoever. The other thing I just want to touch on very briefly is the UMich Consumer Sentiment Survey that we had on Friday. This, of course, being April data. The index did fall to a record low, 47.6 per the preliminary survey. Again, grabbed quite a lot of headlines, but I would just point out a few things here. One is that the vast majority of the data collection was done before the agreement of a ceasefire. So that's, of course, something to bear in mind. The second is that, and I've mentioned this before, the survey has an absolutely tiny sample size, around 400 people in terms of that preliminary print. If you don't believe me, go to the University of Michigan's website. It is literally there in black and white.
If you are quickly on that, this goes what we've said a number of times, and actually we raised it last week. Knowing the methodology of we're not often used to know the scientific like weightings and not going too deep, but having a rough idea of what the methodology is on the big headline data that people choose against, it's very important. And this is a great example.
I mean, yeah, absolutely. Because if you're relying on what 400 random people tell you about the state of the US economy, then I'm sorry, you're probably doing this wrong. To be completely honest, the University of Michigan do say that they survey people in all 50 states, but that means they survey 8 people in each state. So I really don't see any value in this whatsoever. The other thing just to point out is that despite consumer sentiment, with all those caveats and the big political skew in the data, yes, the headline metric fell to a record low, but the longer run inflation expectations component was unchanged at 3.4% for the second month running. And that is, again, something that the Fed will seek a degree of comfort in.
Yeah, no, exactly. Just quickly, before we push on, obviously I've said 2 things I'm watching, which was obviously kinetic action and a ship trying to run the blockade. One thing also, a third thing that I can't believe I missed out, I think I was just kind of focused on one side of the story, is but what happens next from Iran's point of view, given that they've just had a huge amount of money cut off. Basically, they're one of their only ways of getting dollars into the system or getting money into the system from the export. So does that mean they come back to the table a lot quicker? And bearing in mind, we're already seeing seeing chatter of more negotiations in the next couple of days. That's definitely obviously the third thing we've got to keep an eye on.
Yes, that is a very good point, actually. And yeah, I think that is clearly the aim, ultimately, in terms of the Trump administration, trying to get them back to the table.
It does kind of, sorry, we will go on to just quickly, Dave.
Promise.
But one thing that kind of flags is, we look at Russia-Ukraine, right? During this whole Russia-Ukraine conflict, or war, whatever we want to call it, Russia were exporting gas through Ukraine, and they still are.
Yeah.
Well, last time I remember, they still are. So, it was always a bit of a weird one when we were saying, they're at war, but people are still letting Russia access to money via energy. So it's always been a bit weird that that's been allowed to happen, and it was happening with Iran. Like no one was stopping Iranian ships, Iranian kind of Iranian linked ships carrying crude and condensate and whatnot. So the fact that they've cut off, the cash point, basically the money, the money printer, we'll see if that brings back to the table, and potentially, who knows, if that does work very quickly, it's something to argue that we should be doing against Russia. But that's a chat for another time.
I was going to say, that is very much a topic for another time. Should we do the week ahead?
Yes, it's earnings season, isn't it?
It is indeed, yes. We'll get onto that in a second. But and of course, geopolitics will dominate the narrative throughout the week. And that kind of goes without saying. But in fact, the data docket this week is just the dullest thing ever, to be completely honest with you.
It's a bad thing.
No, actually, I think it's a bit of a blessing in disguise, really, because we've got far too much to be focused on without having to worry about incoming figures. Just to pull out a few highlights, and I do use that word very, very loosely indeed.
You're letting out, don't you?
Oh, God. Tomorrow brings the March US PPI report of this, of course, this being factory gate prices compared to the consumer price index that we had last week that we just referred to. And then on Thursday, we get the latest read on UK GDP, although this data is, of course, for February, so it's pre-conflict and will be very, very stale indeed. The other 2 things that I would just flag in terms of the week ahead, firstly, as you rightly said, Ryan, this week does mark the start of first quarter earnings season on Wall Street. Goldman Sachs kicking things off before the market opened today. They're due to report around about 12:30 lunchtime London time, 7:30 on the east coast of the United States. They are then followed by JP Morgan, Citi and Wells Fargo, who report on Tuesday. And and then Morgan Stanley and Bank of America round out bank earnings season on Wednesday. There are a few other reports just worth keeping an eye on besides the banks, including ASML. They report before the market open on Wednesday. For those who are unaware, of course, ASML make the machines that make the chips that go into the data centers. So they're kind of the first link in the chain of the broader AI semiconductor theme. Speaking of which, TSMC, they report earnings before the market open on Thursday, and then streaming giant Netflix report after the market close on Thursday. So plenty of corporate news likely to be coming thick and fast this week. Just in terms of expectations for earnings season, consensus is expecting S&P 500 earnings growth of around 13% on an annual basis. That would be the sixth consecutive quarter of double-digit earnings growth, while revenues are seen growing by around about 10% year on year, which would be the best quarter since Q3 of 2022 if it is delivered. Of course, not only the figures that are going to be in focus, because they're very backward looking at this point, but also the guidance that corporates issue, particularly given what's going on in the geopolitical situation. And lastly, it is just worth flagging that this week is the IMF World Bank spring meetings taking place in Washington, D.C. This is largely just an excuse for every monetary and fiscal policymaker in the world to have a bit of a jolly up, to be honest. However, we will have plenty of central bank speakers throughout the week as a result. ECB President Lagarde and BOE Governor Andrew Bailey, they are both speaking on both Tuesday and on Wednesday. Particularly important, those remarks, given that we are now just, well, effectively 2.5 weeks away from the next policy decisions from both of those central banks. And there's also a whole host of Fed speakers in the mix as well. So yes, geopolitics will very much dominate the agenda this week, but there are a few other bits and bobs for participants to get their teeth into as well.
Just on what Rachel, just on the IMF deal, something weird happened yesterday, which was
this thing with Rach tweeted it.
So our friend Rach, big fan of the show, love you Rach. Obviously Rachel Reeves is who we're talking about, so take that with a pinch of salt. She tweeted yesterday morning, dead on 8 o'clock, which makes me think this was a scheduled post, knowing what I know about Twitter. She put, I quote, "This week at the IMF, I will be showcasing a Britain that is determined to lead at a time of global uncertainty, to weather this crisis now and build a Britain that is stronger, more resilient and prepared for what comes next." Now, she tweeted it, and I've got an alert because I'm that kind of sad individual. I've got alerts when people like Rachel Reeves tweet, normally because I'm thinking this is going to be hilarious. I read it and I was like, what absolute bollocks. And I was just trying to post a meme or something about Rachel Reeves and just say, look, actually, no, I'll tell you what I was going to post. I was trying to reply to her about OpenAI announcing they're pausing this data center, etc., because, poor regulation or anti-growth regulation and very anti-growth energy prices. When I went to reply, I couldn't reply anymore. And I thought straight away, obviously, Rachel Reeves has obviously blocked me. But no, he's deleted the tweet. So I was like, okay, so I gave her 5-10 minutes and thought maybe they just need to add another link or something like that or do something else. Nothing came back. So what's all that about? Now, I can only assume that her, or more particularly her handlers / people that, are controlling her social media, etc., realize that there's only so much bullshit that they can put out on Twitter before people start throwing rocks at her. Because to suggest that, Britain is now determined to lead at a time of global uncertainty is pathetic. To say that Rachel Reeves has helped weather the crisis now and also to build a Britain that is stronger, more resilient and prepared for what comes next is also absolute bullshit. So maybe her team have just realised that we actually can't gaslight that much anymore. I don't know, but it was a very odd one.
Maybe. But I would think it might have more to do with the fact that she's probably not travelling to Washington, D.C. until tomorrow, and they'll post it again tomorrow morning because the article is still actually up on the Times website. So we'll revisit that one, see if the message magically reappears.
What did make me laugh about this Times article is it was obviously sold to her as like a big front page spread. It will take them maximum eyeballs, etc. But they put it on a day where they put a lady from I think Oxford University that basically completely lambasted the UK energy decisions, etc., from Miliband, and that took far more pride of place on the Times website and also the Times paper. So maybe she didn't want to draw attention to the Times this week. But there we go. But,
joined up governments.
Well, exactly that. But anyway, Michael, thank you so much. I'm glad to have you back. Listeners, Glad to be back. Hope we've put a smile on your face, a bit of value into your day. Whatever you're doing this week, keep it tight, stay safe, wear protection.